Hello everyone, my name is Kavam and welcome back to my channel where we break down accounting and finance concepts in a way that's simple, practical, and easy to understand. Today's topic is one that's basic but incredibly important. What is the point of accounting? Why do businesses, big and small, need it? Why do investors, governments, suppliers, and even employees care so much about financial information? Let's break it all down. So, what is accounting? Let's begin with a quick definition. Accounting is the process of recording, summarizing, and reporting financial transactions. But more than that, it's the way businesses communicate what's going on with their money. Think of accounting as the language of business. It tells you how much money came in, where it went, what's left, and whether the business is financially healthy. So, why is accounting so important? What does it actually do? Here are four main purposes with real world examples to bring it to life. Imagine you run a small clothing store. You're making sales every day, but you're also spending on rent, inventory, utilities, and salaries. Without accounting, you'd be guessing whether you made a profit last month or not. Accounting shows where you stand clearly and accurately. Let's say your sales are growing. Should you open another branch? Should you hire more staff? Can you afford to lower prices to attract more customers? With proper financial statements, you can look at your costs, revenues, and profit margins and make smart decisions instead of risky guesses. Governments need to know your income so that they can calculate your taxes. Investors and banks need to know if you're financially healthy before giving you money. Accurate accounting makes sure your business is transparent and compliant with laws and regulations. Here's where it gets interesting. Think about all the people who interact with the business. They all rely on accounting even if they don't realize it. Suppliers use your financial statements to decide whether they should give you goods on credit. If your balance sheet shows high debt and low cash, they may worry you won't be able to pay them back. But if your financials show strong cash flow and consistent profit, they'll trust you more and offer better credit terms. Employees should look at financial statements too, especially if they're working at a startup or a small company. Why? Because those numbers can reveal whether the business is sustainable. If profits are falling and debt is rising every quarter, that's a red flag. But strong accounting records that show growth, controlled expenses, and healthy margins, that's a sign that the company will be around for the long term. So, accounting isn't just internal paperwork, it builds credibility and trust with everyone: lenders, investors, customers, suppliers, and employees. Whether you're a business owner, an employee, or just someone trying to understand how companies work, accounting is everywhere. It tells the story of a business, where it started, how it's performing, and where it might be headed. Even global companies like Apple or Amazon rely on accounting to communicate with millions of shareholders. And local businesses like your neighborhood restaurant or your gym need accounting just to survive. Without it, there's chaos. With it, there's clarity, control, and confidence. So, what's the point of accounting then? To put it simply, it helps you understand where a business stands financially. It supports smart decision making, it keeps everything legal and transparent, and it builds trust with investors, suppliers, and employees alike. Accounting is not just about money, it's about making informed decisions and building a trustworthy business. If this helped you understand the bigger picture of accounting, please like the video, subscribe to the channel, and let me know in the comments what you want to learn next. Thanks for watching, and I'll see you in the next one.